Welcome back. Let's talk about Nazara now, which has come out with its earnings as well as announced a bonus issue of shares. Joining us is the top boss at Nazara, Nitish Mittersain. Nitish, good to have you back on ET now. Good morning. This is Nantara. I'll first begin with the earnings. I have a lot of questions for you at large, the way, we're seeing the larger story of e-gaming, tech and all of that. But let me just begin with the earnings first. What we do see is that the profit after tax as well as margins are flat in the fourth quarter of the last financial year. Given that this space is booming, the number of users are growing, advertising is coming in, why is this the case?
Two things you should look. One is, there is seasonality in our business. And, quarter on quarter comparison may not be the right way to do it. I think the second thing is, our strategy is very clear where we think that, the optimizing margins at this stage for us as a company is the wrong strategy altogether. The cost of not being the market leader and not growing fast enough is not, something we can deprioritize. And we are very clear that we will continue driving profitability. We'll do growth with profits, but we are not going to optimize profits at this stage. So we are reinvesting a lot of our margins and a lot of the EBITDA that we have into growing faster. And I think you will see that play out in FY23, where a lot of the investments we have made in FY22 will accelerate our growth in FY23.
Now, it's very well known, and you have been doing it, that Nazara will also be supporting the larger ecosystem by making investments. Many of them have been announced. Nitish, since we have you here, the times that we are in, the uncertainty, the markdowns, the layoffs, people just enjoy not looking at a screen and being out in public as well. Will Nazara slow down when it comes to this strategy of making investments?
No, absolutely not. I think, the Nazara has been through many of these cycles that you are seeing today, right from 2000, 2008, and many others, right? And we've lived through all of these, and we've always come out much, much stronger. And our DNA has adapted over the years to actually be anti-fragile when it comes to these kind of markets or these kind of situations. Our core DNA of, keeping strong cash balances, not being weighed under a lot of debt, running profitable businesses, tangible cash flow generating businesses. These actually outshine in difficult times because it gives us a lot more opportunities. It kind of reduces the competition pressure because investments slow down in competition. And also, especially in our M&A strategy, right? I think we will be able to do a lot more investments at more value-driven prices. So I personally think Nazara is fantastically positioned. If you see our cash balances, we are at over 700 crores of cash balance as of March end with a debt-free company generating profits. So I think we are actually perfectly poised to take advantage of the current market condition.
Hi Nitish, Avan joining in as well. Now let's talk about your individual segments, because the esports business, that is the highest revenue contributor, nearly 49% in FY22. How do you plan to grow this segment at an accelerated pace? I also understand that the inclusion of esports in the Tokyo Olympics and the Asian Games, that's going to be a huge trigger.
Yeah, I think in India today, if you see our esports business, is already generating in FY22 itself 300 crores of revenue. And I don't think there's any other esports business in the country which is anywhere close to where we are. So we're already a market leader by far, I would say. And I think we're just getting started. It's just the tip of the iceberg. There's huge opportunity in esports. It's going to become a lot more mainstream. And we are investing in a variety of areas around esports to build a complete ecosystem. Just for one example, we invested in a company called Rusk Media, and together with them, we are launching a game entertainment show with a lot of esports stars called Playground. And this is going to bring esports into your complete mainstream, right? So I think we are doing a lot of investments, and the tailwinds will remain very strong in esports, and we will continue to grow.
Now, despite the impact of Apple IDFA in Q1 FY22, the gamified early learning has grown for the year, but in the fourth quarter, it's just about flat. So I just want to simplify it, break it down. How does IDFA impact your earnings, and do you think growth here will remain sluggish?
So I think what IDFA really did was, remove certain ways to track your advertising and targeting, which means, your ability to target relevant customers became very difficult. This is not a Nazara specific case. If you follow the earnings of many tech companies, even in the US, the Apple IDFA has had significant impact on them. What really shines out is our strategy of a diversified platform. Despite the large impact of IDFA in our Kidopia business, as you see, Nazara on a whole has continued to grow in revenues as well as profitability, and that's completely due to our strategy of running a diversified platform, where if any of our one segment of our business gets impacted, it does not slow down the overall trajectory of the company. We believe we are doing a lot of experiments right now in the gamified early learning space to kind of crack the IDFA challenge. And we are very confident that in FY23, we will crack it and resume growth. The team is very much on it. In addition to that, for Kidopia especially, we're launching in this Q1 of FY23 a fairly good size brand campaign, which I think will further boost the recognition of the brand and help in performance marketing, as well as creating additional touch points for our loyal fan base. So for example, we've launched Kidopia merchandise, we have launched a Kidopia YouTube channel. So we have a lot of work going on there. The core product continues to remain very strong, and we are very confident that this engine of ours will fire again.
Nitish, so tell me, I mean, going forward, what kind of M&A do you get into, and how is it that you grow then?
Yeah. So I think there are a few white spaces we have identified. For example, in the early learning space, we've often spoken that we're looking at, an M&A in the 7 to 13 age bracket. We still haven't identified a company that really meets our expectations, but we are hopeful that we will do so in the near future. One other area of focus on our M&A is going to be in the freemium segment. As you see, our freemium segment right now is very small, but we believe that can be a large growth driver. And in the next, in FY23, we will surely make additional investments and M&A activity in that sector, because we see the opportunity to consolidate game development studios, including studios that are focused on virtual reality, which is the next sector I think will really grow. So I think we are going to double down on that. And we will continue growing our RMG business. If you see, our RMG business has grown 115% year on year. And with the OpenPlay acquisition, I think we are on we have a right platform now to build on that. So we may also do additional consolidation in that space.
Right. Nitish, I'm very curious to know. Nayantara, my colleague, is completely hooked on to her Oculus. I can't get my hands off from my Nintendo Switch. I wanted to understand, given that, metaverse is now a reality, what is the future of gaming? Where are we headed to?
Look, it's going to be very disruptive, because you are going to go from playing a game to being in the game, and the complete experience changes, right? It becomes completely immersive, and it's going to be very difficult to get out of the game in that sense. So I think it's fantastic future. There's going to be huge opportunity in the virtual reality space. It's been around for a long time. We've been hearing for maybe 10 years or more that, VR is the next big thing. But I think it's coming together now with the headset prices coming down, the technology improving. I think you will see a hockey stick curve in the next couple of years, and we are very bullish on it. We haven't done much on the VR space yet, but that's definitely on our horizon in terms of our M&A activity.
Oh, yes. I think Keanu Reeves and The Matrix are really ahead of their times, right? I think we're all headed to that world. Nitish, before I let you go, and I'm sorry to come back to, the old world outside the metaverse, but, your shareholders will want to know this as well. You have lived through many cycles. You have said that, and you have said that because of the very many cycles, you will not stop giving out checks, will be business as usual. In fact, sanity will reign in. But when you look at the share price, you're what, about 70% down from the 52-week high for the Nazara share price. What's the larger message out there for your shareholders?
Yeah, sure. I think you can look at glass half full or half empty. we're one of the few tech stocks that are still above their IPO price, I would say, of 1100 rupees. But yeah, I think you're seeing market cycles play out. We can't completely stand out of it. But I think the company is on very strong foundation. Like I said, we have a strong cash balance. We are not burning money at all. We are making money. Tangible cash is coming into our accounts, and we will deploy it. So I think shareholders that stick with us, and if you see our 22-year history, any shareholder that stuck with us largely has profited from it. So if shareholders believe in us, believe in the gaming industry future, I think hopefully our best efforts and best intent will see value creation.
Nitish, it's always great to have you here. Thanks so much for joining us today in the real world. See you in the metaverse soon.
Sure. Thank you. Bye.